Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, for listening to us each and every week as we try to break down for you the opportunities or the problems you're going to have getting a loan today. It's not easy. There's all kinds of new requirements. Interest rates are terrible. We'll get into all that as I'm sure the show goes on. If you want to see the show each and every week, you can go to YouTube. Jeff Barton, the Mortgage Voice, is on YouTube. Been there for a long time. We have archived hundreds of shows, and you can go back and see where we were a year ago, 2 years ago, as we got through the pandemic. And now, of course, on the other side, there are certainly enough world events out there by which can affect not only the interest rates, but also the economic world that you live in, as well as the physical world you live in. So if you're out there, stay safe and be safe. Again, I am Jeff Barton. This is the Mortgage Voice, and again, thanks for tuning in. KCAA is our radio station affiliate in the Inland Empire, San Bernardino, Riverside counties. Thanks very much. All those people over there, Fred and Mark, and the different people that bring us to you. In my particular studio, there's Daryl, of course, who's been with us for, 7 or 8 years. We're going to say 7 or 8.
Sounds right.
That's exactly. And myself, of course. We were just talking a little bit off air about the etymology of the show and where we've been and how far we've come 10 years in. And we're still talking about a lot of the same events. World events have taken over a lot of what's going on, both in economies around the world, as well as what sets up the Fed and the Fed interest rate hikes and all the distraction from a lot of people's focus, especially this week with the massacre and the terrible violence going on in Israel. And so I broke down a little bit of what that is, and we talked last week about distractions and how it's very, very difficult when you have distractions, not only on a macro level, but also on a personal level. And I wanted to go through that a little bit just to give you some strategies as to how to try to fix that. We talked to Dr. Bertoli about that. She'd been on the show a couple of weeks ago. And certainly we've talked to many of the loan officers and the account executives that come on the show and talk about their products, the customers that they deal with, and the like. So let's just get into a couple, 3 things about what is happening and why these things take over your life. Now we obviously have the internet and what goes on into the internet, and what used to be thought of as the breakthrough and the education of the world and free information flow has turned into really a attention suck and the adrenaline pump as you get into arguments with people about nonsense, just because you want to win or just because your side, and the world now is broken up into this and that, whether you're on one side or the other. And because of that, yes, the internet is not what we want it to be. And of course, the misinformation from everybody and anybody who is on there. So usually I try to stick close to what I know and stay true to who I am. Not an easy task, especially when you're dealing with information that is trying to drive you to keep watching. That's what the algorithms are on all your search engines and all your particular sites that you go to, whether it's Instagram, Facebook, X, any number of others, LinkedIn, you name it. If you're looking at it and searching it, they're going to feed it to you, and that's only going to keep you coming back for more. And that's the unfortunate thing. Certainly in television, we've seen that forever, whereby the programming is reflective on how people watch, right? So Nielsen used to be the king of it, and those families that were Nielsen rated, and you could get your Nielsen rating from your TV, and they do it in radio too, and whatever your number was, that was how you got produced. But today it's more about individual clicks and followers and influencers and all the other things that I just don't really understand because I'm too old and too tired to really keep up with it. But I do know that the exact same things that were going on in my generation to distract you and sell you stuff is the exact same things going on in this generation to distract you and sell you stuff. So what am I selling? Well, I'm trying to give you some information about how you can separate from that mess and concentrate on what you need to do in order to get to where you're going. Home ownership in America is still the number one way by which you can really get wealthy. And what do I mean by wealthy? I bought a house in 1996. Malibu, California. Everybody out there is thinking, oh, Malibu. Well, back then it was sort of a cow town, if you want to believe it. Even in 1996, if you can believe that. If you go back to the 50s, 60s, and 70s, Malibu was one of those places whereby you wanted to go to Malibu, it was way out Route 9, you just couldn't get there from here. But today, it's got a panache, it's got a worldwide brand label, but it didn't back in 96. They were old, cranky people running the local shops that were run down. Most of the city was kind of trashed, and you could buy a house for $250,000. People today say, $250,000? You can't buy a closet in L.A. County for $250,000 now. Yes, I understand it. The point is, buying real estate then, which we paid $500,000, I borrowed $100,000 from my father-in-law for the down payment and was able to, at that time, get approved with my wife, 8.75% interest rate loan, and that got us to the next level, which was, of course, 25, 30 years later, we'd paid off the house, and the house is worth whatever Zillow says it's worth. Could be $3 million, could be $5 million, depends on the day and the algorithm cheat that they use in order to keep you driving to their properties. Zillow got into a huge mess. I think it was 18 months ago to 2 years ago when they tried this iBuyer program where they would buy your house at whatever their Zestimate said, and their Zestimate was grossly overvalued at 10 to 15%. Of course, their own people didn't even know that, so what happened is 18 to 20 months after they opened the program, they closed the program and lost billions of dollars because they just bought too high because they just couldn't figure out how to do real estate. Real estate is local, it's individual, and you have to have knowledgeable people involved in order to price a property right, in order to buy it right. And that's just the way it is. There is no algorithm, there's no personal computing expert that's going to tell you if you buy at this price, you're going to make X by this time 2 years from now. Because nobody knows that the disaster that happened in Israel 3-4 days ago was going to happen in your neighborhood. Maybe it not be that particular massacre of people, but it could be a weather event. It could be an earthquake. It could be all kinds of different things. Heck, we have mass shootings here all the time in California, let alone in San Bernardino, Riverside. It could be another Vegas concert event where 560 people get gunned down. I mean, these things happen, and they affect property prices. It could be 2007, where we have a real estate bubble, and in that real estate bubble, what occurred after that was we had a decline in certain areas of the U.S., 75%. A lot of people upside down, got rid of those properties, and who bought them? That's right, corporations. Now, why did corporations buy it? Because they have the deep pockets to do so, and they understand that real estate is still the number one way to get rich in America. Now, for a corporation to buy a house and rent it to you, you're not getting rich as the owner, as the lessee, but the people who are, obviously renting you that property, the corporation, they're getting rich. So, as I said, there are many, many reasons why which property ownership is the way by which you can get into the wealth street here in America. And because you can do that, yesterday I spent some time up in Santa Barbara. I was up there doing, this sounds ridiculous, but I'm a EMT in my second job here, right? So I was up there at a Louis Vuitton event at some place in Montecito, where the rich come and view the the unadvertised Louis Vuitton product, and they sit around for a week and a half doing these private showings at this huge mansion. There must have been 25 security people there. I was an EMT, the only medical person there. But think about that for a second. Your house, all your neighbors come over, and they're going to see. We used to do this with Mary Kay. We do it with what was another one of the products we do it with?
Amway.
Amway, yes, exactly. And these were the pedestrian product people that would come around and set up these houses. But in this case, it was just an overblown over-display of wealth and disgusting, in my opinion. But people got the money, they can do what the heck they want. That's America, good for them. But what I'm trying to say is, at this event, what they're proposing and what they're selling, and they're selling brand names, and they're selling status, and they're selling all the things that wealth brings you. Well, if you don't get into the housing market at whatever price, you're never going to experience that unless you get the tech lottery or this guy that, did you see the guy that won the lottery?
No, I knew where he was from.
1.7 billion.
Billion.
It's just, come on. Only in America, right? Let's just have a lottery that
Cash value is what, $700 million?
Yeah, you know what? I mean, it's basically an Eras tour for what's her name? This Taylor Swift.
Yeah.
I mean, just incredible. But my point is, you're out there, you're listening, you're going, oh my God, all these things in the world and everything Jeff's talking about, it's really distracting me. Well, the point is, don't let it distract you. You've got to focus in on what you've got to focus in on. I have zero power over my own environment, let alone the community environment, let alone the country or the world or the internet or any of these other things that I talk about. But what I do have is a way by which I can make money, I can have a plan, and at a certain time I have enough, and in my plan I can buy something. And buying something is your ticket to freedom, given the wealth that you can continually accrue. Even in bad markets, it's good. Even if you lose 20, 30, those people that lost 75% that held on to their property are now up 50%. And that only took 12 years as they paid their mortgage, whatever their mortgage rate was. My original mortgage was 8.75%. I got it down to 5.125% before I paid it off 25 years later. I paid a ton of mortgage interest. But when I could, I paid it off, and now, of course, the property is worth way more than I paid for it. The property's paid off, and that's a good thing. Individually, there's marriage, there's children, there's aging, there's death. There's all kinds of things that can distract you internally in your family. Best thing you can do for your family is provide security for them. If you're a man, a woman, another type of descriptive person, and I mean gender-wise, and I mean familiar-wise, I mean whatever you think you can do, making money and buying property is still the best way to protect not only you, but your loved ones, people around you, the people you want to take care of. Because they can't take that away from you here in the U.S. Yeah, there's eminent domain, but that's not happening in your neighborhood. It's not happening in my neighborhood. Eminent domain in other countries, rather. You know, as a U.S. citizen, you can't go anywhere in the world and buy a property. You have to use a citizen through a corporation to buy property in other countries, not here in the U.S. And because you have property insurance and because title insurance is a requirement on any loan, you can guarantee that you're the owner of that property from now till ever, to the center of the earth through Mars, I think is what it is, in terms of the airspace and the ground space. So what I'm saying is, hey, real estate is where it's at. You need to get into it, and whatever's out there distracting you, don't let it, because your security of your own self and your own family is in your hands. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, for listening to us each and every week as we come to you to try to bring to you information that you can use, whether you're going to buy a house, sell a house, refi a house. We have mortgage discussions all the time on this show, as well as the occasional account executive from lenders who will tell you about programs and everything else. It's a very difficult market for people in my business, and I'll tell you why. The interest rates. Now, there's many reasons why the interest rates went up. You know it, and I know it, but, you know, there's better people than me that can figure that out. People with boots on the ground ready to go and tell you what's happening with their borrowers. George Gonzales from Malibu Funding comes and joins us today. George, how are you?
Hi, Jeff. I'm doing excellent, man, over here in Rancho Cucamonga. Like I said earlier, just enjoying this weather that we have. It's pretty hit and miss, cold, hot, so just living it up.
Okay, so I'm going to ask you the psyche of the borrower in this particular market, whether it's shell-shocked from the rates that have gone up, they're hovering above 7.5% to 8%, or the world events that are out there, whether it's now the tragedies happening in other places like Israel or over in Ukraine. Anything else? You're getting a lot of notifications there, George.
Oh, yeah. Sorry, Jeff. I got a text message on my call right on my phone. Sorry, I'm turning it off.
No, not at all. So could you just give us your idea or your feelings about how your clients clients are reacting to all those outside stresses when it comes to keeping their focus on, purchase or some kind of refi?
Yeah, Jeff. Well, as you mentioned, all these things that are happening it's like a wild river going on right now.
Yep.
And people I think are on the sidelines still. They've been on the sidelines for, the last 6 months to a year because they're not sure that the storm is still going on. They're waiting for it to calm down, I think, before they decide to, make their move and jump in like they were jumping in a few years back.
Mm-hmm.
The interest rates, they have something to do with it because they continue to rise inch by inch. So it's like, for instance, I have somebody approved today for $500,000, and then we wake up tomorrow and now they're only approved for $475 due to the spike on the interest rate.
Yep.
So I guess for me, what I'm running across is when I'm talking to these buyers is that the uncertainty is what's keeping them from committing.
Right.
So the uncertainty of the market, so that's why I try to just sell like I've always had, was just sell the payment and just let them know that, this is temporary. Nobody ever stays in their mortgage longer than 5 to 7 years. Typically,
that's right.
They refi or sell or whatever they might do. But, I mean, that's the growing trend over the last 25, 30 years, I guess.
Yep.
But, I mean, as far as that goes, that's the stuff going around on the market is interest rate. Interest rate is still everybody's, first word out of their mouth when we talk about buying.
Oh, yeah.
Let alone refis, which are the only ones that are the refinance is a little bit different. The refinance, these people, a lot of these consumers are so dropped in their credit or so buried in their credit debt that they're looking for ways out, such as the home equity lines, of credit. So I see I'm getting a lot of interested home equity lines, but still, again, they're still not sure if they want to touch their mortgage. A lot of people are staying away from their mortgage, if that makes sense.
Yeah, it does make sense, especially if they have a medium memory, right? 2008 wasn't that long ago.
Right.
In terms of the real estate market out there and customers, you still writing a lot of pre-approval letters for people going out and shopping, or not?
Yes, pre-approval letters, running credit reports, all of the above. Again, it's just a matter of the inventory is kind of low.
Right.
In our area over here, sales prices are outrageous for, let's say, for instance, I'm in Rancho Cucamonga. You could have got a median sales price out here was probably about $400,000 about 2 years ago.
Right.
Where we're looking at median in Rancho right now, $650,000,
wow.
$700,000 is the starting point.
Wow.
At a house, and it's ridiculous because then that's not even for your picture perfect house. That's for you get it and you still got to do work on it.
That's that's a different type of market. I mean, when we look at markets, we always go, let's say you go from 0 to 250, 250 to 5 to 750. Well, you're changing markets and the type of buyer that can afford that, the type of job, the type of people, everything has to change if you're lifting your home prices up between $650,000 and $750,000, up from $300,000. I mean, that's a totally different neighborhood.
Correct. And what I'm noticing is I'm having to ask borrowers to find a co-borrower, a non-occupant co-borrower.
Yep.
A relative,
Yep.
a mom, a dad, and I'm getting 4 or 5 applicants for one purchase, and it's just
what a nightmare.
Again,
yeah.
Oh yeah, more paperwork and. And us, less pay, we get paid the less, and
Yep.
do the most.
The adding of extra borrowers onto the application complicates an already complicated problem, and also the difficulty to try to get a loan approved anyway. It's not gotten easier.
Oh no! Again, I was speaking to a client yesterday, and she thought that we can tell the underwriter what to do. And I said, no, listen, the underwriters are against us. They try everything in their power to deny files.
Right.
And that's why it's so important that before we submit it, that we have a clean cut file and, that there's nothing that can kill the deal, because once the underwriters see something they don't like, you don't get away from that.
Yeah, that's true, and that's why we see, obviously, the application process is down, the funding process is down. All of the loans closed this year will be, about a quarter to a third of what they were 2 years ago. So you've gone from a $4.5 trillion mortgage market down to a $1.5 trillion or a $2 trillion. I mean, that's a massive reduction in the capacity of the system, and obviously it's affecting a lot of people's jobs, and a lot of people, who work in the industry now are, out finding something else to do.
That is 100. That's what I was just going to bring up. I was saying, the sales force is for lenders is falling, and realtors, matter of fact,
right,
is reducing every day. Every day I'm hearing more people falling out of the market than I used to work with.
Yeah,
and they just say, George, well, I have a database, I have a crowd. It's just nobody really wants to pay $5,000 or $6,000 a month right now on a mortgage.
Yeah, no, and whether it's more housing. Now, I asked several people out there in San Bernardino about housing itself. Are there any new housing being built? What's the issue? Do we have corporations still buying up houses and renting them out? What is the situation with housing out there?
Yeah, that's it. There was some building going on up along the 15 freeway of the North Fontana area, but it kind of looks like it came to a halt. Mm-hmm. And I'm imagining it's probably the high cost of the labor and of the parts and the construction is probably slowing it down. I'm figuring, we're not going to get our bang for our buck if we put them out there and sit on them. So I don't know what's going on. It kind of slowed down. And, and like I mentioned, the inventory, dude, that comes out. If it's something priced right and it's nice, it's gone again, just like any before. It's gone in a day. So the other stuff that comes out is equally priced, but it's not in the condition that people want it. They want to pay top dollar. They want to make sure they don't have to put another $100,000 or $50,000 to live in it.
Yeah, of course, especially at those prices, especially out there. I mean, they're just sticker shock must be unbelievable for your borrowers.
Unreal, Jeff, unreal. And again, like you said, if we didn't have so many resources like we have in Malibu, I would have probably, because we have so many banks to choose from, it gives us more options to help borrowers with down payment assistance, different programs, VA programs, nurses, teachers, all these good programs. We have every option for them. So at least we know we have, all stops if we need one.
Hey, George, we're at the end of it. Appreciate you coming on. Good update. Could you please shout out a way by which customers, people who are interested in your information, get a hold of you?
Yeah, go ahead and call me directly at 909-900-9565. George Gonzales, out of Rancho Cucamonga, 909-900-9565.
George, thank you very much. Once again, coming on the show. Always love having you on. Thanks.
Thanks, Jeff.
Okay, that's George Gonzales, Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show each and every week. We come to you, we bring you solutions to problems that you have with your mortgage. A lot of problems out there right now at 8.5% mortgage rates, or 8% or 7.5%, wherever they are, they're volatile and they keep moving. And if you set something in motion today and you don't lock, it may be worse for you tomorrow. So these are the type of things that we try to help you with. We are on a number of different podcasts, and if you want to see and hear us in those podcasts, Daryl, you have the names of those?
I sure do, Jeff. We've got Apple Podcasts, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, Podclips.io, and, of course, themortgagevoice.com.
Okay, two things. Mortgagevoice.com is our website. Go there, and you can see some of the guests that we bring on the show. You can contact them directly. You can listen to the shows that we've done. Also, if you go to Podclips.io, where we go and center a lot of our podcasting people who come to us for that, there are a bunch of other podcasts there, too, whether it's in finance that we're in, whether it's lifestyle or health or dispute resolution. Now, a lot of people don't know what that is, but if you're in a real estate contract, there's a couple of clauses in there that say, hey, if you get into trouble in this contract, what are you going to do? Mediate? Arbitrate? Well, that's what these people talk about. So podclips.io, great place to go and get all this information. Okay, I am Jeff Barton. This is The Mortgage Voice. And with us from Jet Mortgage is Tomas Trujillo, who's been on the show many, many times. He's a go-to for a lot of what's happening in the mortgage industry. And you know what, Tomas, with what is happening in the mortgage rates and what's going on in the world, give us some good news on solutions you might have.
It is a crazy world. It's a crazy time.
Yep.
But you know what? We got some breath in our lungs.
Good.
Got the sun shining, and it's all going to work out.
Okay, well, that's good to know. Okay, so tell me a little bit about Jet Mortgage. I don't know a lot about them, but since you're there, I know to trust them. So tell us about Jet.
Hello?
Yes, tell us about Jet Mortgage. Can you hear me?
Yeah, there you go. Sorry, I lost you for a second.
Yeah, no problem. So
I'm over at Jet.
Yep.
And we are a full service lender. We actually really great rates. We're usually top.
Tomas, you're breaking up on us there. I don't know what the issue is, whether it's your cell phone or your reception, but if you want to... What's that?
Here you go. Is that better?
Much better. Thank you very much.
Okay.
Was that Bluetooth?
Great. Yeah, I had to take it off of the Wi-Fi.
Oh, yeah, that's probably what it is. Okay, so tell us a little bit about Jet and what's happening over there.
So at Jet, we're an all-purpose lender. We got everything. We got great rates on everything. Right now, we've been at the top of Loan Sifter, which is, as you know, it'll tell you who has the best rates for products. For multiple products, my FHA stuff, I'm doing down to 580 FICO. I have all kind of DPAs now. Now I'm the king of down payment assistance.
Oh, excellent.
It's a little rough right now with those. You don't see a lot of people wanting them right now, but I'm thinking come next year, things are going to be a little different. I think that's going to be a really hot product. Mm-hmm. These days, I think the hot product for me is the I-10 DSCR.
Okay. Tell us about that.
I don't see a lot of it. So if you're an I-10 borrower, you have your letter from the IRS saying that you're I-10 with the number on there, you can get a loan with no income. I'm not going to ask you for any income. As long as the property qualifies, it makes money, we can do that loan. If you do have a job, but you're not reporting all of your money on your taxes, I do a lot of mechanics, a lot of guys who own tire shops, who own restaurants, and they're going on a P&L loan, an I-10 P&L, which is awesome. So all you're going to do is you're going to get the guy who does your taxes to give me a letter saying you make this much money, and you use this much to run your business, and I will give you a loan for that.
Can I ask you a question? Let me break in here for a second. When you say I-10, explain that slowly so people really understand what you're talking about.
So an I-10 borrower is someone who is here legally, but they're not a permanent resident yet.
So no Social Security? No
Social Security.
Right.
You have a letter from the government, and and you can use that to go full doc as well. A lot of people think that, oh no, I've been using a fake social.
Right.
Or a social that doesn't belong to me to do for my job because I needed it. And a lot of people, they get stuck on there because when they go to get a loan and they got to show their taxes and their pay stubs,
right,
they'll say, hey, wait a minute, your social or your IT number on your taxes doesn't match your W-2. We can't do this. Me and everybody at Jet, we really don't care. I don't care if you have a different number on your pay stubs, on your W-2s. If you're going to go full doc, as long as your taxes have the I-10 number, right, I am good. We are good to go with that.
So the I-10 really is just about proving who they are, and the income from the property itself is going to pay the mortgage, so you don't need income. What kind of down payment are you looking for? What kind of credit score?
On that, we're looking at least a 650 credit score. Okay. We need, as far as income, we're good with whatever the property generates. We can go down as low as 75% of the mortgage of whatever the mortgage is going to be. So, if your mortgage, let's say, is $1,000 and the property is only bringing in $750, you're good to go. We can do that loan for you.
Okay, and again, I'm a little confused. What is the down payment on that? 25%?
Oh, I'm sorry, it's 20%.
20%. Oh, okay. So that's just like a 30-year fixed rate in the old days, where 20% was kind of standard.
Exactly, and you can use a gift for that. I mean, if you want a gift, All you need is 5% of your own money, and 15% can be gift from anybody, from any relative.
Okay, and how long? Okay, so your I-10 number, is that like fresh off getting it yesterday, or do you have to have it seasoned a little bit for a couple of years? How, any other requirements like that?
As long as if you got it yesterday, you're fine. We can
Okay.
roll with that.
Okay,
100%.
that's pretty good. That's very good. I mean, for people who want to get into the market, whatever the market is, and obviously the prices have really risen here in Southern California. But is Jet in other states and other countries as well? And not other countries, but other states and other counties as well?
We're everywhere except New York and Washington State.
Oh, you just went to the opposite side of the country and said, no, we're not going to be there. Oh, that's okay. You know what I mean? We're going to point at two places and we're not going there. No, that's that's very funny. Okay,
who knows why? But yeah, that and our seconds. Our seconds are burning up right now.
Okay, tell us about the seconds, because I love that product. Just depends on which of the three that you're doing.
On the seconds, we're doing standalone.
Okay.
So it's not a HELOC. It's not like a credit card where you're going to charge what you want a little bit here and there. We're giving you a whole shot in one bang, so you got your money if you want to. Because I'm sure most people don't want to touch their 2 or 3% 30-year fixed rate.
Why would you? Right.
Exactly. But if you need the cash,
right,
and you got to do you got to take a trip, you got to pay some hospital bills, whatever, you can do a standalone second up to $500,000. We'll go up to 80 CLTV. Some cases, if you have the right FICO, we can go maybe a little higher, but 80 is pretty standard, and we'll get you the cash you need. We'll give you a second. You don't have to touch your first. We have a variety of them. We can do ARMs. We can do fixed rate. We got a little bit of everything for everybody.
Now, these seconds, the price on them, the cost, and appraisal, how does that work?
So we'll do an appraisal.
Uh-huh.
Absolutely. We use the appraiser of your choice.
Oh, okay.
The cost is minimal, about $1,000, and the rates are actually pretty good. I'll go down as low as, I believe, 9.25, all the way up. I mean, if you have horrible credit and everything is bad, I mean, you're going to be, it'll be a little more. You're going to pay for it in rate. But so far, I've been putting people in about maybe 9.99 on a 30-year fixed.
Oh, so you do a 30-year fixed? I see. Okay.
Absolutely. And
what is the loan limit on that?
$500,000.
Okay, and $500,000. Any percentage on the loan? Can it take up to 100% or?
Up to the 100. Actually, no. We'll max out at an 80 CLTV.
Okay.
And on that, it's a pretty good product. I've really been digging the product. And if you have, let's say, I got one the other day that the borrower is taking over an assumable loan, and he wants a second, so we're able to do that. The only way I can't do it is if you're in a reverse mortgage and you wanted a second. I wouldn't be able to do that. But if you're in an interest-only first, I can do that as long as our DTI is in the right spot. But we're very amiable. We want to get loans done. We're looking for them. We're hot. We want to go.
Okay. Shout out your phone number or a way by which people can get a hold of you directly. These are pretty good products.
Absolutely. My name's Tomas Trujillo. You can reach me at 323-228-5181, or you can email me at my infamous email, which hasn't changed in 30 years.
Big Bad Loan Daddy. Come on.
Yes, sir. Yes, sir. I am the Big Bad Loan Daddy at gmail.com.
Excellent. Tomas, thank you very much for coming on the show. Always love talking to you. You're one of the best. Thank you.
Thank you, Jeff.
Thank you very much. That's Tomas Trujillo from Jet Mortgage. I'm Jeff Barton, your voice in the mortgage industry. Be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Hello and welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. As we come to you thousands and thousands of times during different segments over the years, I've really been happy to bring to you information, people, and a lot about what's going on inside the industry. Many things prevent you from getting a loan. The main thing that prevents you is that people aren't making enough money off you. Let's just face it. No, I'm not a socialist, but I'm just saying there's a lot of money out there. There's still a lot of money out there, but having you get that money is going to cost you a ton, and it's discouraged a lot of people in the market. So at the onset, at the beginning of the show, I tried to say, hey, look, stay focused, stay on the mark, try not to let the world get in the way between you and what you're going to eventually need, which is security, long-term wealth, and all these things are through property purchase in the U.S. Rates are going to go up and down, as we all know. But what doesn't go up and down is the value of property. In the long run, property values in the U.S. have gone up steadily for the last 100 years. So bank it and try to get in. One of the guys that has really helped the company and that I used to work for, Malibu Funding, as well as me personally, has been Charles Giscombe. He comes to us now talking to us a little bit about some of the solutions they offered United Services Financial, USF, and, from his basic experience. Charles, how are you? Welcome to the show.
Thank you, Jeff, for having me. Great to be here again.
Thank you very much. Tough world out there in the last week or 10 days. A lot of distractions and trying to keep people focused on some of the other important things in their life rather than empathy and crying for people that they, feel for. What are you doing in order to do that? And give us an idea of some of the products that you're thinking are pretty good for people in this market.
You know what, Jeff? It's a great question. We're doing a lot of explaining. We're doing a lot of reassuring. And it sharpens your skill set up. Honestly, at the end of the day, we always talk about this. It's easy to sell an interest rate because a low interest rate is a low interest rate.
Right.
But at the end of the day, this is the knowledge part of mortgages and helping people understanding trends, what's to come, what the expectation is,
right,
and what the market will be back. If you can manage those expectations in your clients, it's an easier deal because they understand exactly what we're looking at. And we have to explain to them that we've been here before. It's just creating a more longer-term strategy than we normally are just putting you in a low-interest rate loan. With that being said, after you have the trust and you've explained everything and they understand exactly what's going on, now we say, hey, listen, there's still money to be made out here. The market's still holding itself correcting, and the values are still in these properties. What we need to do is find out what are the best programs that are on the market today based upon today's interest rate that can get you into a home, that can still get you into a profitable situation, and help you the best we possibly can, getting you to a mortgage that you can manage and make the payments for. That is the key in explaining that. And when you're doing that, you have to be very versed on the other programs outside the traditional mortgages that may benefit and help clients get into the properties.
Well said. I mean, there's a macro to all this, but the micro is simple, right? Making the monthly payment. Can we get you there temporarily or long-term? However it works out, but if you can afford that monthly payment, let's get you qualified for some kind of loan.
Absolutely, Jeff. We always talked about it when I was at Malibu Funding, and I'm still talking and teaching it over at United Security Financial. The most important thing is a lot of people, when interest rates were very good, would say, I'm interest rate conscious. Well, you know what? You have to make sure that you mean what you say and you say what you mean. Are you interest rate conscious or are you monthly check writing conscious?
Right.
There's an absolute difference. What I tell our clients is just because you have a low interest rate, you may have a low interest rate with a high LTV. With a low interest rate and a high LTV comes many things. Comes mortgage insurance, comes many different things that you add that will increase your payment. In this particular market, because no interest rates are really good, basically what I tell our clients is let's get you with some products that have value-added services that can extend out the amortization or the term of the loan that would allow you to write a lesser check because there's more months added to it. So as opposed to a 30-year traditional loan at a low interest rate, if it's a higher interest rate at 8.5%, what if we do a 40-year loan, okay, or an interest-only 40-year loan that doesn't penalize you for paying interest only and allows you to extend the loan from a 360-month loan to a 480-month loan? That obviously will make sure your principal interest payment goes down. That way you're able to get into the house, still have a low payment as though you have a low interest rate, and these products also come with no mortgage insurance. So at the end of the day, when you're writing that check, you're looking comparable or close to that traditional mortgage that you thought was a lower rate that would provide you and garner you a lower payment. These are just some of the things that you can add and present to your clients so that they can feel comfortable with still getting into a mortgage that they can afford every month.
That's great information, and it's actually absolutely right on with an explanation to somebody who may not understand that there are still options in this market for you to get a lower payment on your loan. And that's really something that, I don't think many loan officers who just jump in, right? They're order takers at the deli. They'll, you get up to the counter and you give them the order and they'll say, here's your price, and that's it. That was the market. Today you have to have a long memory as to what things were, where they are today, the programs that you can offer that are based on a long time and a lot of knowledge of the industry. And that's what you bring to it. That's why I think talking to someone like you, especially when it's so uncertain out there, people are, they're scared for a lot of different reasons, right? Yes, there's tragedy in Israel, but there's school shootings in the U.S. There's all kinds of things that can make you scared and not want to risk something. But having a seasoned loan officer like yourself on their side to be able to help them through and help them say, hey, look, you might save $300-400 on your mortgage payment on a month if you do it like this. That takes experience, and that's one of the things you bring to the show.
Jeff, I really appreciate that. You know what? At the end of the day, the reality is I view my relationship with my clients as a mirror. As I look to them, they look to me. If I'm panicking and uncertain and unsure what the market's going to bring, how can I expect them not to have the same feeling, if not worse, because they're not mortgage professionals?
Right.
At the end of the day, the more knowledgeable we are, the more we know how to react, the more we'll be able to suggest and guide on how to transact, and they'll feel more comfortable knowing that we are maneuvering through a market. Although it has its ebb and flows, we can at least adapt, create strategy, get them in, and they know that we have a strategy that will keep them comfortable and allow them to and be able to manage whatever situation we put them into comfortably, and know that we'll be there for them in the event that the market does change in the future. We still can adapt and adjust and make some concessions so that they can still be in this market comfortably.
The mortgage interest rates that are today, we all know they're going to change, and they're going to change, either go up or go down, because that's just the way it is. And whether you're in 1980 when they were at 18%, 19%, 20%, or whether they were in 2021 where they were 3%, they are going to change. And taking advantage of it, you can't take advantage of it unless you're in the market. Obviously, purchase is one thing, but refinance and taking money out and seeing your property value grow as the mortgage payments go down, that's what everybody's hoping for, especially when they get into this type of market.
Absolutely. You won't go to war without your soldiers. You don't go to this mortgage market without your knowledgeable base team that can help you and maneuver and guide you through this. So, of course, everything's going to happen. It's always going to make changes. The uncertainty in today's society, in the government, and different things can all these things can cause changes in the market.
Yep.
But if you are confident in yourself, if you have a professional, your real estate agent, and your mortgage professional that is helping you and guiding you and suggesting you have a team that can help you make the right decisions. I always believe that we will dictate to the client as the client dictates to us in regards to what it is that we can do for them. And with that, they'll be able to get out into this market and still take advantage of these of the values that are still out there in these opportunities in these investment properties, as well as primary residences. We can provide help in all of those, with all those particular things, Jeff.
Thanks, Chuck, and I appreciate you coming on. You're such a loyal guy, and I really, really do appreciate it. Would you mind shouting out or telling people how they can get in touch with you? You do loans everywhere, and you can help them almost everywhere. So if you could do that, that'd be great.
Absolutely. You can reach me at that good 702-328-5191, that Nevada 702-328-5191, or you can email me at cgiscombe@usfwholesale.net. That is Giscombe@usfwholesale.net.
Also, you can go to the mortgagevoice.com, and Charles is featured there prominently if you want to see who he is and get in touch with him that way. Charles, thank you very much for coming on the show.
Jeff, I always appreciate it, man. Thanks for having me.
Thank you very much. That's Charles Giscombe from USF. I'm Jeff Barton, your voice in the mortgage industry. Be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show. You know, we have a website, themortgagevoice.com. I get Google statistics almost every month that say that people are going there, they're looking at what we're doing, and they're growing what we're trying to accomplish, which is bringing to you information about mortgages and real estate. Pretty straightforward, pretty simple. This is the, what am I going to call it? The Severe 7, because it's a 7-minute segment. That's why I'm saying that. Get that? Okay, so here we go. Let's just get right into rates. I'll tell you what the rates are today, where they're headed. 7.62 for the 30-year fixed, 7.0 for the 15-year, 7.10 for FHA, 7.85 for the jumbo product, and 7.07 for the 5/1 ARM. The 2 years at 5, actually is at 5.001, I think it is, and the 10 years at 4.659 at a 16-year high, by the way. We are seeing yields, obviously great. There is a great debate right now whether we're to get investments into the 2-year at 5% or to hang around and try to invest it in something else. Obviously, if the stock market does a little bit of a increase in value over the next 3 to 5 months, it'd be better to go in there. But 5% over 2 years is still pretty good. Park your money there, 5%. Yeah, that's tremendous, especially if we see inflation come down or if we see the Fed reverse and lower interest rates a little bit late into next year. Both of those things would obviously bring those yields down, but we see yields go up. Why? Because nobody wants to buy U.S. debt at the current prices. It's easier to get money other places, so U.S. has to raise their particular yield on these securities in order to get people to buy them. There's so much going on out there in the real world that is affecting your decision making and affecting my mind that I just have to mention just briefly. Politically, still without a speaker, still looking for that so that we can get both a budget for the federal government, a continuing resolution, or pass a fiscal budget for that. Yes, does that affect what we're doing? Sure, it affects the VA, it affects VA loans, it affects FHA loans. It certainly affects the Fed and their decision to raise interest rates, and the mortgage interest rates always get nervous. That's why banks raise interest rates to begin with. Yes, it's about the 10-year, but it's also about risk, and risk in a market where we have no government functioning and the government may run out of money. Yes, that's risk on the banks. So that's another reason why it's very important that we get somebody in there. The war in Israel, the terrible, horrific things that happened there over the last week to 10 days, just awful. There's nothing to describe it other than to say, I hope it doesn't come here. But of course, we all know that it had rained down on here, whether it's shootings at schools, mass shootings at concerts in Vegas, wherever you are and whatever you're doing. Yes, it's happening not only there, but it's happening here too. I don't know what the answer to it all, but that also affects what's happening in the mortgage and in the real estate world, just because people's flight to security is often what they do in hard and tough times. And because we are in one of those mortgage markets, mortgage rates, as I just mentioned, 7.62 for the 30-year fixed, yes, these are issues that keep people in their homes. It's one of the reasons why we don't have a lot of homes on the market. We have one of the lowest inventory levels ever, and we probably are going to see it decrease even more. Until we get either government-backed housing for people who need it in low-income areas or in low-income situations for borrowers, i.e. get them off the street, and another issue entirely. But, I'm around a lot of different people with a lot of different slants, whether they're right, left, upside down, or downside up. What happens is people have issues about what's happening in their neighborhood. And when that's the case, they get very I guess conservative in a way to be able to say it, and just push people away. We don't need to push people away in this country. What we need to do is solve problems. Housing is the biggest one we have, especially for people who don't have one. Needs to be done now, and we need to bring down prices by getting more affordability. The only way to do that is to build more houses. The only way to do that is to get builders to understand that building is not a risk and to insure them somehow against losses. Of course, we have not ever gone there, but it is a way by which we can get companies to do that. Let's see, what else? There's a number of different ways by which cities in general, let's see, only 16% say good. Okay, yes. So in different cities, there are ways by which people say, hey, look, I want to buy a house, or no, I don't want to buy a house. Well, let's see. The top 5 cities in the country and the percentage of people who think it's, a good time to buy a house. In Los Angeles, which is number one, actually. 23.8% of the people think it's a good time to buy a house. That's contradicted to 2.5 years ago, where about 60 to 70% of the people thought it was a good time to buy a house. Why? Interest rates. Come on, that's why. I mean, obviously, people are still working and there's plenty of jobs out there, but at the same time, if you're worried about interest rates and you're worried about payments and you're worried about possibly recession in the future because inflation, because of what's happening is that very few people think it's a good time to buy a house. San Diego, California, 18.2% think it's good. Used to be 60-70%. Richmond, Virginia, Cincinnati, Ohio, and Providence, Rhode Island. All only 14% or less of the people think it's a good time to buy a house. That is not going to get it done in the housing market. We're in a housing crisis right now because of the fact that there are no inventory and prices are high. Also, the interest rates are high. It's usually that interest rates are high, prices come down because there are fewer buyers. It just hasn't happened that way because we have so few product out there and people are locked into their 3% mortgages. Nobody's going to sell a house at 3% and buy one for 8%. Just not going to happen. People are going to stick and stay, and therefore we have a frozen housing market. And there's, as I made the suggestion earlier, government has to get involved more, and protections for people who build, and again, lower interest rates so that people can afford it. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.